Wow, that's a pretty big statement, right? It's basically saying that everything we thought we knew about wealth and value, well, it's changing. Stuff that used to be an externality, just something off to the side of the financial model, is now moving front and center, right onto the balance sheet.
So in this explainer, we're going to dive into what might be the most important new asset class out there, nature itself. And we're not going to talk about it just as an environmental issue. Nope, we're going to look at it as a core financial strategy, something that can generate real, long-term, and resilient returns.
Okay, so here's our game plan. First up, what even is this new asset class? Then we'll get into how to put a price on nature. After that, we'll look at the massive opportunity here, how you can actually build a portfolio, and finally, we'll cover the risks you need to watch out for.
All right, Section 1, Nature as a new asset class. You might be asking, why is this all happening now? Well, for decades, we kind of treated the environment like a free, all-you-can-eat buffet. That way of thinking, it's officially over.
Let me just throw a number at you that really puts this whole thing into perspective. Ready? $44 trillion. It's just a massive, almost unbelievable figure. But what on earth does it actually mean?
Well, that number represents the slice of the world's total GDP that is either moderately or highly dependent on nature. We're talking more than half of all global economic activity. So you can see, this isn't some niche feel-good issue, it's the literal infrastructure that holds up the entire global economy.
And if that dependency doesn't grab you, check out the risk. The World Economic Forum now puts biodiversity loss and ecosystem collapse right up there in its top 5 long-term global risks. We're talking on the same level as massive financial crises or global conflicts, so doing nothing isn't just a missed opportunity, it's a huge systemic financial threat.
Okay, so if nature is this massive asset, how in the world do you put a price on it? Before the world of finance can invest in something, it has to be able to measure it. So that's what this next section is all about, translating the language of ecology into the language of finance. The big idea here is something called natural capital. It's actually a pretty simple concept, but it's kind of revolutionary. It just asks us to think about the world's natural stuff, soil, air, water, all living things, the same way we think about buildings or machinery. It's a productive asset. It actually creates value.
And if natural capital is the asset, like the factory machinery, then ecosystem services are the products that come off the assembly line. Or, to stick with the finance analogy, they're the dividends that the asset pays out. We're talking about things like clean water, bees pollinating crops, or forests soaking up carbon. These are the real, tangible benefits we get.
Let's make this super clear. Think of a forest. The forest itself, that's the natural capital. That's your asset. Now, the timber you can get from it, the carbon it stores, the clean water it provides, those are the ecosystem services. That's the value flowing from the asset. Now, this is where it gets really cool for anyone who understands investing. Think about biodiversity. It's basically nature's version of portfolio diversification. You know how you don't put all your money in one stock? Same idea. A more diverse ecosystem is way more resilient to shocks, like a drought or a new disease. And that resilience means more stable, reliable returns over the long haul. Okay, so we've got the what and the why down. Now for the fun part, the trillion-dollar opportunity. Let's talk about where the money is actually flowing. How does all this theory turn into something you can actually invest in?
Right now, the biggest game in town is the carbon market. But you gotta know, it's really two different worlds. On one hand, you've got the compliance markets. Think of these as mandatory, government-run systems where big polluters are forced to pay. Then, on the other hand, you've got the voluntary markets. This is where companies choose to buy carbon credits to hit their own climate goals. And just look at the difference in size. It's huge. The compliance market is the 800-pound gorilla, coming in at almost $500 billion. The voluntary market, way smaller, under $2 billion. But that's where all the cool new innovation is happening. It's almost like the venture capital wing of the climate world. But hey, it's not all about carbon. The opportunities are getting pretty diverse. You've got sustainable timberland, which can be a great hedge against inflation. You've got water rights, which is basically a bet on scarcity. You've even got things like ecotourism, and each of these plays a totally different role in a portfolio, with its own risk and reward.
And just to be clear, we're not just talking about feel-good projects. The numbers are real. Take regenerative agriculture. Some studies are showing that farmers who make the switch can boost their profitability by a whopping 120%. Why? Because they're spending less on inputs and their farms are tougher against things like droughts.
Okay, this all sounds great in theory, right? But how do you, as an investor, actually get in on the action?
Let's get practical and talk about the actual tools you can use to build a nature-positive portfolio right now.
Basically, there are three main ways in. The easiest route for most people is public equities. Think ETFs and mutual funds with a biodiversity theme. You buy them just like a stock. Then there's fixed income. You can buy green bonds that are funding specific conservation projects. And finally, if you want to get your hands dirty, there are private market funds where you can directly invest in assets like forests or sustainable farms.
But that leads to the million-dollar question, doesn't it? There are so many funds out there that call themselves green. How do you know which ones are the real deal and which ones are just marketing?
All right, here's a quick 4-step checklist to help you out. 1. What's the strategy? Is the fund just avoiding bad companies, or is it actively investing in good ones? 2. Look under the hood. Seriously, check out the top 10 holdings and ask yourself, does this make sense? 3. Check the ratings from a third party, like MSCI. And 4. Look at the fees. Are you paying a fair price?
All right, we can't wrap this up without talking about the risks. Let's be real. This is still a new and emerging space, and you absolutely need to go in with your eyes wide open.
So what's the number one danger for an investor in this space? It's a problem that honestly haunts the entire world of sustainable investing.
And that risk is greenwashing. It's when companies or funds talk a big game about being eco-friendly, but don't actually back it up. So here are the red flags to watch for. Vague claims like eco-friendly, no third-party verification, a company bragging about one tiny green project while the rest of their business is dirty, and a total lack of real data on their impact. Your best friend here is a healthy dose of skepticism.
So let's end with this. The idea of valuing nature isn't some passing fad. It is becoming a core part of what it means to be a smart, modern investor. Knowing how to understand, value, and invest in nature isn't going to be a niche skill anymore. It's going to be what separates the winners from everyone else. It sounds dramatic, but it's true. The very nature of wealth is changing.
I hope you got a ton of value from that. Now, to take your learning one step further, I've put everything into a mind map and an audio podcast for you, perfect for listening on the go. Just check the description for the links. And hey, if you love this kind of content, join the community and hit that subscribe button. I'll see you in the next video.